What's up, everyone? If you're new to the channel, welcome. My name's Scott Taylor, and I've been day trading financial markets over 10 years and have made millions in dollars of verified profits in that last decade. And I was going for a drive and I thought it'd be a good idea to just talk to the camera and give you basically a decade's worth of trading advice in one video. And I want to talk about practical advice, technical advice, emotional advice. When I look back over the last decade, the things that I was wasting my time on and the things that would have accelerated my progress from not knowing what I was doing to then break-even trader to then consistently profitable trader in a much quicker period of time. First thing I want to talk about is realistic expectations, because everyone comes into trading and one of the first things that you think about, I thought about it, and it's one of the most common questions that I get asked from people, is how much money can I realistically make from trading? It's like one of the first questions asked. And I kind of understand why, but once you know the answer, and you've got to get the right answer from the right person, because some people will say, oh, you can make this much money, and then yeah, I'll help you out. When really it should be a case of, well, you could earn $10 a week. You could earn $10,000 a week. There's quite a lot of variables. You know, the amount of profit you can make from trading is relatively uncapped. It'll come to a point where capital is the main barrier. So, you know, if you've got a trading strategy that you've worked on for 2 to 3 years, because realistically that's the minimum standpoint from you looking at a chart for the first ever time to actually making some money. This is a bit of a debate in the comments, I think, is going to happen, but I would say realistically 2 to 3 years minimum before you can consistently make any kind of money in the markets. But yeah, you could make, I'd say realistically 2 to 5% a month on average, right? So you'd be beating the S&P 500, certainly beating putting money in the bank. Some months you'll do nothing. Some months you'll give money back to the markets. And then other months you might do like a 14% in 1 month. Sometimes you might do 20% in a month and then nothing for 3 months. That's the thing that I would say, is that even though the profit is uncapped, 1, it depends on not only the trader's ability. 2, it depends on markets, market behavior, market structure, what's going on fundamentally, technically, economically, geopolitically. And it also depends on the trader's emotions, and it depends on capital. So if you're making 5% a month on average and you have $500, you won't be making as much as the trader who's doing the exact same strategy and still making 5% a month, just like you are. You're not doing anything differently, but they might have $100,000, right? Or $50,000. They're going to be making much more money than you are, not because of ability or strategy or because they're smarter than you, just because they have more capital than you. And that leads into the next thing, that capital for most people comes later on. It's a bit of a tight bit here. So most of you will start with maybe $5,000 to $10,000 to be able to expose yourself to 1, perhaps education, 2, learning curve, 3, actually having some money in an account, or potentially instead of opening a small $5,000, $10,000 personal trading account, you might use anywhere from like $2,000 to $3,000 over the course of a year, hopefully, on prop firms and evaluations. And there's a whole debate on that as well. But in my experience, most people, they will start off with maybe $5,000, £5,000, and put that into a trading account. And it's not about making money fast in trading. The expectation of new traders is, okay, well, if I put this much money in to an account, how much money can I make back? You should be focusing more on who should I learn from. And there's a lot of really successful traders out there, not just me, but there's others too, right? You've got to stick with that person for a serious amount of time, because not only will their trading style potentially adapt, and their trading style, like mine, will adapt because the market conditions adapt. And this is something that we're going to move into as a second topic. Whether you're a beginner trader, an intermediate, or an advanced trader, the markets evolve, right? Market structure is not always the same. You've got to think about what drives the markets. It's things like inflation rates, depending on what you're actually trading. Are you trading gold? Are you trading oil? Certain commodities, they react very violently to things like conflict. So when there are times of no conflict, the markets will move differently to times where there is conflict. There'll be more volatility, more unpredictability, bigger moves. And then you've got things like inflation, change of inflation rates. in unemployment rates, unemployment claims, and things like who's in power. So is it a Biden market? Is it a Trump market? This is going to affect things like tech stock. It's going to affect the S&P 500 and everything else as well as that. And then you've got, from a higher time frame perspective, anything from like a 4-hour and above, so 4-hour daily, weekly perspective. But if you look at an NQ chart right now, since like the middle of June 2026 to today, which is about, I think it's like the 16th of July. I haven't even checked the calendar. So we're halfway through July already, and the market has done nothing but it's gone sideways, right? It's consolidated. And that's because we have an ongoing conflict between the US and Iran. We also have all sorts of things going on with the new Fed, who is quite stubborn in the information he's releasing around reducing or cutting rates, cutting inflation rates. He doesn't seem to be doing so, even though Trump is asking him to do so. So there's a lot of uncertainty, and then you've got the conflict between Iran and as well. And you've got things like in the AI industry, which is affecting NQ, which is NASDAQ, which I trade the most. And a lot of people do nowadays because of the volatility and usually the predictability behind it. But it's impacted a lot by the things that like the supply and demand chain and the price of things like microchips and other physical minerals and commodities that are used in physical AI hardware. Ooh, listen to that V6. It's not a naturally aspirated engine though. I do wish it was. Still get a nice kick to it. So I've started really kind of the early kind of advice of what your expectations are when you're first coming into trading. And one of the main things of understanding early on, which is something that I never learned for like 4 or 5 years, is things like markets, different types of markets, market structure, and the different types of market structure. So you've got consolidations where price action just goes sideways. So it's either going up, down, up, down, up, down, up, down, but moving sideways. It's a consolidation. And then you've got trending markets. I mean, for years, I thought that we were always in a trend. I thought that we would either be trending up or would be trending down. So missing out that key component that from a higher time frame perspective, especially, it doesn't matter so much when a 1 minute, 5 minute, or 15 minute time frame is moving sideways, because it will do that every single day. That's the accumulation phase before a manipulation phase, before the actual move that goes that we like to catch every single day. But when a 4-hour or a daily time frame is consolidating, that really decides really how much money you're going to win or make during that period. And the fact that I didn't know that for so many years was a real hindrance to my ability to profit. So understanding that the markets won't consistently go up or consistently go down all of the time. In between, there is often a period of consolidation where it does neither. And that period is usually where most retail traders actually lose money. So this is why I'm saying this now. Understanding market structure, understanding the higher time frame. Is it trending? Is it consolidating? And when it's consolidating, especially when there's geopolitical or fundamental economical reasons behind that, you should be in a risk-off approach. So you should not be chasing the market. You should be reducing your leverage use. Don't just come into the market and go, I'm going to 1% trade every single time. You need to understand market conditions and go, okay, should I be in a risk-on or a risk-off approach right now? The opposite scenario when I'm risk-on is when the higher time frame is trending. So when we're in all-time high markets, external range structure, so we're taking all-time highs over and over again. On a higher time frame perspective, we have a trend, high highs, higher lows, for example, especially in a trending market such as the NASDAQ or NQ, because it's typically bullish, 64 to 74% of its lifespan. So if you only look for buys or longs, then you will be more profitable than if you're looking for shorts or both, right? Now, if we have a higher time frame that's printing higher highs and higher lows, and it's in all-time high territory, meaning it's seeking out new levels, there's nothing to the left for it to react from. That means that the lower time frames, like the 15-minute and lower, they're going to be way more predictable, and you're going to be able to see repetitive patterns over and over again, which is a trader's dream, right? The same goes for gold, etc. as well. Now, I have already covered like the time span it takes to become a successful trader. It's very relative. It's very broad. I mean, I could teach 50 traders at one time over a 90-day span, and they're not all going to succeed at the same exact time. And that goes to show that it's not down to the teaching from the education provider or the mentor that you seek out. It's not from the strategy that you're trading, but it's more about where you're at, I would say, both personally, mentally, and professionally in your life. There was a stage in my life where I ran a full-time fitness business that was open 7 days a week. It was open 17 hours a day. And it was a small business, which meant out of my 10 employees, if one of them, for whatever reason, couldn't perform or couldn't be there, it would have a big impact on the business, which meant I would have to step in. So it was very interruptive for me. And things like that will have an impact on your trading. You could be in that situation where you're running a business, you're also trying to learn how to trade, or you have a job. You could be working for someone else, but you're in meetings, you could be traveling, you could be on site, and you don't have the ability to be at a screen during the trading session. That can be very, very impactful. And quite frankly, one of the biggest deciding factors in how quickly you are going to go from where you are now studying to actually being a consistently profitable trader. You've also got to think about from a personal standpoint. So I've covered the professional standpoint, but what about a personal standpoint? And there's two sides to this. Man, the UK roads are a state. They are an absolute disgrace. Can't really enjoy a car like this when the road service is so bad. But yeah, there's two sides to the personal aspect that's going to impact your trading. Bear with me. Safely overtaken. The first side is, do you have children, right? Who do you live with? Are you young and you're living with your parents? Are they full on? Do you have a full on brother or sister? Do you have someone that you need to care for? Do you have an elderly parent or grandparent that you are the sole carer for? Again, going back to, are you a parent? Do you have a baby in the house that's crying every 5 seconds that needs your attention every hour? For me, it was children. So one, professionally, I had a very busy business that would take a lot of my time, physically and mentally. And then I would come home and I would have children, young children. And one of my children that I had at the time, she's 13 now. I love my children to bits, but she has complex needs, not physical, but mentally. She was full of anxiety and she had a real kind of hatred towards being separated from me in particular. So when I was at work or when she was at school, her anxiety went through the roof. She just felt really unsafe. And it's just the way she's wired. She's great now because getting her into the right school, which took 10 years, by the way, we knew there was something not quite right. Almost as soon as she was born, we got her privately diagnosed autistic when she was 4, but she didn't get into a specialist provision school till she was nearly 12. And we went down the private route. So it was very difficult because I'd either be at work and I could be, trying to run a business while also trying to trade either the London or the New York session. And then I could get a phone call from a school at any minute saying, you're going to have to pick your daughter up because she's doing this and she's doing that and we can't handle it. Or it could be, I'm trying to backtest, I'm trying to study in the evenings, but she's not going to bed. Like, she would not sleep. She would not let mum put her to bed. It had to be me. I had to do the bath thing. I had to get her changed. I had to feed her. She wouldn't let anyone else touch her or do anything like that. So I was like a carer, really. It was almost like being a sole parent for that child with complex needs. A lot of you probably, or some of you will have experienced that. I know what it's like, and it's very all-consuming. It really is very consuming. So you're trying to trade, thinking about trading, trying to run a business, trying to put food on the table, you're trying to raise your children, and children without complex needs, they're difficult enough. When they have complex needs, it's even tougher. Nice stretch of road here now. Had to do that. It's one of my favorite roads. All under the speed limit, of course. I'm in a 50 right now. In a 60. Let's cover market misconceptions. So there's a lot of people that say, oh, stop hunt, liquidity grab, right? Liquidity sweep, manipulation, stuff like that. Now, I call it liquidity because liquidity is all over the chart. So you could say you have high highs, high lows. We're going to talk some technicals now. Let's say you're on a 15-minute chart on NASDAQ or NQ. The high highs, high lows, right? and your New York Open has opened right out the gates, that first 15-minute candle has closed bullish. A lot of traders are going to be going long. Some people will say that's a retail trader trap. And I used to call it the same. It was more a figure of speech rather than an actual thing. Because the institutes that actually can move the market, they can't see your stops anyway. And if they were trying to manipulate the market, they would lose their jobs or potentially even go into jail. They don't really care about your $50 or your micro lots anyway. But it's just understanding how the market works. So the institutes that place orders, they cannot get all of their orders fulfilled at once. So they will get in with some of their orders, the market will move, and then the market will come back, maybe take out a low, like a London low, sometimes an Asia low, or even if the 15-minute candle of New York Open closes bullish, a lot of the time you'll find that the origin of that candle will be liquidity, and price will come back and reverse and then continue higher from there. You could see that as a liquidity sweep. That is not institutes or the markets out to get you and taking your stops, right? That is just a collection of more buy limit or sell limit orders. But it's a great way to trade. I've been trading liquidity concepts since I can remember, 8 or 9 years. And a lot of the most successful traders I know will trade with liquidity as well as other things like volume profile. And now order flow is becoming a big thing, which is a whole different topic. What about grading setups? So grading setups is something that I want to talk about. So we've talked about downsizing and being risk on, risk off approach, depending on market conditions and market structure. We've talked about that, right? Putting risk aside, because that's one component, deciding how much risk you're going to put on one position based on the market conditions and how clear the markets are and what fundamentals and what kind of news is happening that day or that week. But you've also got technical setup grading. Let's say, for example, my entry confluence on a 5 or 15-minute time frame is I want New York to open higher. Let's say I'm bullish on the day because I've got a 4-hour market opening gap resting above. And on the 15-minute or 5-minute time frame, I'm looking for an entry and I want some kind of a liquidity sweep. So exactly like I explained earlier, the first 15-minute New York opening candle closes bullish, quite a decent sized candle. I'm going to wait for the market to relax and come all the way back to at least take out that New York opening low. What I'll also notice is, and this will help with my grading, if price is above VWAP, which is a volume-based indicator, right? Price will like to come back and mitigate VWAP. I can also use a volume profile tool, which is where most of the trading activity has occurred. So you've got the value area low, lowest point of the day, value area high, current highest point of the day, and the point of control is that midline, which will move with volume, but it's where most of the trading volume occurred. If that is below price as well, it's another bullish confluence. And then I will look for a 5-minute inverted candlestick pattern formation, which is essentially a bearish inefficiency filled by a bullish candle closure. That for me would be like an A grade setup. What would make it a B grade setup is if I had all of the same confluences, however, we were not mitigating the point of control using volume profile, or maybe price had moved quite a bit deeper and price is now underneath VWAP. That's now, okay, B grade. C grade would be there's no liquidity whatsoever. New York continued, did not come back for the New York low. It didn't take the London lows. It's not mitigated VWAP. It's not come back to mitigate the point of control on a volume profile. But I'm going down to like a 5 or a 1-minute time frame and looking at a continuation model. That would be still valid based on my trade plan. And everyone trades differently. You've got to understand and dictate what is valid and what is invalid based on your trade model, because you will ultimately build more than one entry model. I have like 2 or 3, and then you've got different time frames. Sometimes I'll enter on a 15-minute or a 5-minute or a 1-minute time frame. Most of the time it's about a 5-minute time frame. But yeah, if I'm looking at a short-term continuation, which I actually had yesterday, I was wrong yesterday. So I actually was in a B grade trade because price had all of those exact confluences, but we were trading below VWAP. I took a buy. I was humbled. I got taken out. My bias was wrong. That happens. It's all part of trading. But then my bias had flipped because I understood we were trading below VWAP. We had then rejected VWAP underneath VWAP and the point of control at that point, which then took me out. And then I saw a lower time frame continuation lower. And I actually caught 2 short trades following momentum of the 1-minute time frame, which did 2 things. It clawed back my loss and it gave me some small profit as well. The reason it was a small profit is because I'm on a risk-off approach right now, because in July right now, NQ markets are consolidating. There's a lot of uncertainty. We've had things like core CPI, and the Fed has testified twice this week as well. So there's a lot of uncertainty in the markets. I want to talk about 3 key trading principles that I could leave you with so that you could take away from this and go and apply this. Some of them practical, so you can physically do something. And that first thing is, I want you to backtest as much as possible. Like, I'm in my 11th year in trading, guys. 11th year. And what do I do on a Monday? Typically don't trade on a Monday. What I do is I go over the previous week. Even if I've done that on the Friday or the Saturday or the Sunday, without any distraction or any hesitation, I will find 1 hour of my Monday to go over the previous trading week, and I will dissect it, and I'll remind myself what happened, which does 2 things. It brings you back up to speed after having the weekend off, gets you back in the zone. It reminds you how price got to where it is and understands market structure from that perspective. But it also helps you to learn. And I'm still learning how to be a better trader now. You will never just be an accomplished trader, right? It's like, for example, I am sitting in a 6-figure supercar right now. This time, 6-7 years ago, I was striving to own a car like this, and I thought I would be mission complete. I would be the happiest guy in the world, and I am happy, don't get me wrong, but every time you accomplish something, it becomes the new norm. So this is normal to me now, right? And I'm not saying that to flex. I'm saying it because it's true, right? And I drive this probably once every 2 weeks. Don't get me wrong, I don't regret buying it, but your whole perception changes when you've got things like this. But yeah, back to trading principles is that first one, that being prepared, right? Being prepared for it, always looking to improve, going, okay, I didn't trade last Monday, that's fine, I'll test it anyway. Tuesday, I made some money. Wednesday, I gave it back. Thursday, I didn't trade, or I was break even. This is hypothetical. Friday, I made some money again, but how could I have improved? Or in your case, if you're watching this video right now, you're probably not consistent yet. Understandable. And I want to help you in literally every way I can. So let me know in the comments, by the way, is there anything that you want me to cover on a video? And I will put the time in and just help you. Right? By the way, there's not going to be any links below this video to sell you a course. None. My mentorship is closed. I'm not taking anyone on. I'm not interested in selling you any education to manually trade. But if you want me to help you by creating content, and let me know as well, do you like this kind of content? Last week, I posted a podcast style. So I had a guest. I had one of my business partners in Quantiva Pro, which is the algorithmic trading side. Do you like this style? Do you like more the technical style? Just let me know, and let me know what you're struggling with. But yeah, so spending a Monday, especially before you start actually trading in that new week, go and test the last week. Can you improve? Can you learn from either your mistakes? Because like I say, most of you watching this right now, if not all of you, are not profitable yet, which means last week you probably lost money, or at best made a little bit of money, but you probably gave back a lot of the profits you made earlier on in the week. Another bit of advice is just really tone down your risk. Whether you're trading your own capital or whether you're trading in a prop firm, please, please, please don't just listen to people online and go, I'm going to 1% or 2% risk everything. Your time will come where you will know when to put risk on and when to take it off. Just go really, really slow, like 0.25% risk at least. And you'll find that you're wasting a hell of a lot less money on things like evaluations. Because you'll be surprised over a 6 to 12 month period how much money you're spending on evaluations when you're blowing through them in a period of days or weeks, right? And you know, forcing things and over leveraging is one of the biggest things that will devastate a trading account. I'm going to tell you what my biggest loss was. I actually lost $17,000 in a single trading day a few years back. That was of my own personal capital. So it was actual loss. That was a Friday, right? It happens to all of us. So that's the third key principle. Just don't over leverage. Just don't do it. Like, it doesn't matter if you're profitable or not. When you over leverage, and I over leveraged that day, I also over traded. I was forcing it on a Friday. And you know what made things worse? Not only did I lose over $17,000 in a single trading day, but actually, if I'd stopped trading on the Thursday, I would have had an incredible week. And it took me weeks, if not months, to recover that loss. Because that's the other thing. When you over leverage and you're taking way more losses than you should be, then you realize and go, oh, I need to be on a risk off. I need to take my my leverage right down. Dug yourself a hole. It's going to take you a lot longer to dig out of that hole because you're now winning. You could be an incredible trader, but it's going to take you weeks, if not months, to dig yourself out of that hole, because you can't just over leverage to win the money back, because it's going to dig yourself a bigger hole. Sometimes that will work, but 9 times out of 10, it will lose. So please do not do that. And the last piece of advice is something that's very common, very, very common. This happens with my own trading students, and not something that I can physically have an impact on them. I can only tell them and remind them and help them, just kind of a support line, as it were. It's their mental state. So if you're stressed or if you're unwell, please do not trade. Do not trade at all. If you're traveling or you can only access the charts from your phone, please do not trade. You need a laptop. You need peace of mind. You need good Wi-Fi, right? If you've got people talking to you, if you're sat at a communal office desk and you've got a workmate here that's trying to talk about what she did at the weekend, and then this guy over here is trying to ask you to look at his spreadsheet, like, you can't trade. Don't trade, right? Because you're forcing it. You need complete clarity. You need to really relax as much as you can. And for some of you, I had this conversation with one of my students recently. Some of you might have to have a complete change of industry, right? If you cannot put yourself in a position and you want to be a manual trader, you can't put yourself in a position where for 1 hour you can lock yourself away completely uninterrupted during the London or the New York session. You may as well give up, right? You may as well give up trading, or you could try the automated route. Let me know in the comments if you're interested in the automation side, because that's the closest thing to passive income as you could possibly get. If you're thinking about putting your money to work and you're thinking about like property investment, which is obviously much higher risk, a lot more work, a lot more uncertain, and a lot more expensive, especially nowadays. The property market is different to how it was 10, 20 years ago. But let me know about that. But if you're trying to plan your trading, you physically can't be at the charts during a session, or if you can be at the charts, but only from your phone, or you've got people around you hassling you, don't trade. You just can't do it. You're going to have to wait. And then that could be, again, a deciding factor in how long it's going to take you to become profitable. Because if you can only trade 2 days out of the week, you can only trade 2 days out of the week. So someone that can trade 5 days a week could potentially become profitable in half the time it takes you. Yet, if you guys are interested in knowing more about what I'm interested in cars, what I'm thinking about having in the future, I had this car. I bought this for £110,000. It was 2 years old. Let me know if you want to know more about this or the Cayenne. I mean, I have a Cayenne S. Okay, so it's an SUV, but it's 440 brake horsepower. Beast of a family car. I've had that for coming on to 2.5 years now. And you know what? I'm going to probably keep that Cayenne until it breaks, because it's such a great car. It really is. I mean, that's only worth about 55, 60 grand right now. I'm not spending stupid money on cars. The last thing I want to talk about is like diversification of funds and things like that. And away from trading, I've bought probably 7 houses and lived in each one of them over the last 10 years. I always used to buy brand new houses before I had money. And then when I started making good money, I started buying old houses and doing them up. So my last house, I renovated it. I didn't make a whole lot of money on the sell, but we ended up making money from owning it because we rented the house out, not Airbnb. You don't make much money from that, a couple of $100 a night. And then someone's sleeping in your bed, no thanks. I rent it out during the day to companies who will come in with photographers, videographers, and instead of them spending tens of thousands of pounds on a warehouse to make it look like a house, they just rent a house, and they will pay good money for that. My old house was refurbished. We refurbished it from the ground up, made it very traditional, very unique looking, and that's what brands love. But it was quite a small house, to be honest, especially with the 6 of us living there. So we have just moved in about 3 weeks ago to a new house. It's very big. It's almost 10,000 square foot, including the cellar, which we're probably not going to use much. I will convert it into a wine cellar at some point. Let me know if you're interested in seeing more about the house. Someone's just pulled out in front of me. Great driving skills. But yeah, it's an old rectory. It's got roots dating right back to 1,000 years, different houses that have been built and either knocked down or burnt down, and then more houses have been built in the same exact spot. The building that I've bought that's standing there is over 300 years old itself. It's got a lot of history from even private owners. There's some really interesting, really old photos of people with horse and carriage, really old classical cars like Rolls-Royce, classic. I'm talking 100 years ago, and everyone wearing top hats and long coats, those tailcoats. Very, very interesting history. a lot of wealth and power and corruption in that house that I'm living in right now. I love that stuff. It just gives it character. But anyway, it's so big for a reason, not only because we want a big house so we can give our children the best possible upbringing, so they've got like 2 bedrooms each for themselves, but also because we actually do what most people don't do, and we actually monetize our house. We can't at the minute because it's a building site. It's going to take probably another 2 to 3 months to renovate the house to a standard where we can start renting it out to brands and companies again. But again, that's another income stream that we've been doing for 3 years, and we will continue to do so. Because it's bigger, we'll have bigger brands coming in. The volume, frequency of shoots that we'll be doing in that house will increase. And it also means that we don't need to move out of the house when they're there, whereas before we'd have to go and Airbnb somewhere else just to let them be in our house. But in this case, we'll just be in a different wing. And they could be, in the south wing, we'd be in the north wing. They'd be in the east wing, we'd be in the west wing. So, think outside the box. Don't just think about a 9 to 5. Think, what can I do? Can I start social media? Social media, building a personal brand, like what I'm doing right now, is one of the biggest things that you can do. And it doesn't necessarily have to feed the trading space. Like I say, we do it for property as well. I get offers all the time for stuff, and I'm not really interested in like product affiliation. I have companies, even mostly trading related, that will approach me every single day, and I'm saying no 99% of the time. But it just goes to show that companies will throw money at you to showcase their product or service when you have an audience. And that's something that, if you're an aspiring trader, I definitely recommend doing. Everyone starts somewhere. I started with like a couple of hundred. In fact, I've got a screenshot of where my current Instagram profile hit 100 followers. And I thought that was a great milestone that it's in my story highlights still now. You go right back, and I took a screenshot of my 100th follower. Bear in mind, I'm at 210,000 followers now, but my 100th follower, I put it on my story and I celebrated. So we all start somewhere, right? And your videos is going to suck. Your content's going to be terrible, but you'll soon get better with experience. Anyway, there might be some useful links below. Again, I'm not selling you a course, but there's some useful links below, and hopefully you're leaving me some comments. Let me know if you like this kind of content. Let me know if it sucks and you don't want to see it anymore. I want to provide as much value as possible, and I want this to be as entertaining as possible as well, so that you stick around to the end, of course. So I'm going to take the roof down, actually. Let's take the roof down on this thing. Oh, the fresh air. There we go. The fresh air. And we can hear the exhaust. And if you're serious about making trading actually fit your lifestyle, then this is the big one. We've just launched Quantiva Pro, our new automated trading offer. And it's everything we've been talking about, done for you. Spots are limited, so the link to apply is in the description and pinned in the comments. If it's open, get in today. If it's full, join the waiting list. This is the move.